thank you for the very, very kind introductions. And now we're going to talk more about regional integration. And what I'd like to do is to turn it over to my fellow panelists and first of all, ask them, what are the benefits of further integration from your perspective where you sit? And what I'll do is I'll just go right down the row and start right here.
So, I mean, to take the question again, it was about the benefits or how we see the integration going forward in the region?
So what benefits do you see, where you are in your location to benefits? What are the opportunities?
Okay. Well, first of all, I want to thank all the organizers for inviting us to the conference and our partner PSX and Mr. Chairman, Mr. Farouk, and all other related parties for this kind invitation. It's really a pleasure and honor to be here and to present Azerbaijan and Baku Stock Exchange here. So to speak up on behalf of the capital markets of Azerbaijan and on behalf of the Baku Stock Exchange, I mean, to take it from top down, so the Azerbaijan's economy apparently has been oil and gas exporting economy, and so far based on the economic development on oil and gas revenues, now transitioning its role in the region to a strategic logistical hub in between the Europe and Asia. And basically, the economy has been raising funds and financing through the banking sector and through the involvement of the government financing and through the involvement of the development finance institutions and the lines of financing brought by those institutions. I personally think that there were a lot of inefficiencies in utilizing the capital and raising the funds and using just banking sector and relying on the funding from the government and on the funding from the development finance institutions, because the very mandate of these, kind of financing sources are a lot different from the commercial and capital market, mandate and sources. First of all, the efficiency is being lost. Second, the key target of the financing is more like on the development side than on the commercial, gain-making or return-making side. So those are the two key factors that really differentiate the scope of the financing structured and arranged across the companies, both in private and government sectors. And the capital markets used to be a little bit kind of the second leg than the banking sector and the, sovereign financing sector. So that's why I think, but the economy is a small economy. So just by going to the local sources of funds and local sources of investors wouldn't, save it all. I mean, so we saw a lot of sovereign entities, a lot of large corporate structures going to issue Eurobonds or other, structured financing products in European markets or in Middle East. So that's why we think that the integration of the capital markets is becoming more and more vital in order to most effectively use the capital and to become a kind of a red carpet or the bridge between the local large corporate structures and the government projects and the sources of capital in across the regions. That's the first thing I think. I mean, access to the capital and better, alternatives to the government and the development finance institutions financing. So that's I think the key benefit that the South Caucasus region, not just Azerbaijan, can benefit from this kind of integrations. And the second one is that, I mean, to me, the two basics are, the second one is about the knowledge transfer and spillover and the competition it can create between the markets and between the, regions, because in a secular economy like secular capital markets so far, the participants of the capital market do not really develop the very expertise they need to bring this up to scale and to bring the market experience to compare with the with even emerging markets. I'm not even talking about the developed markets. So, I mean, just not to take much time out here, but I would say two key benefits for the region, for South Caucasus, Azerbaijan, and I can speak on behalf of maybe former Soviet countries as well. It's mostly access to more funds and more alternatives in the sourcing of funds and the knowledge transfer and the competition spillovers that can benefit for the development of the market. Thank you.
Thank you.
Thank you, James. So much has been said this morning by distinguished speakers about the benefits of integration from Pakistan's perspective that I'm going to keep my comments short in the interest of giving more time to our foreign delegates. But as you rightly put, James, it depends very much on the level of integration that we're talking about. So let me give some concrete examples about what we have already done, bring a little bit of a historical perspective. So I was a former commissioner with the SECP, but I joined the commission actually originally when it was first set up in 2000. And at that time, as we were trying to bring our domestic practices in line with international standards, we very much relied on knowledge sharing and peer reviews from international jurisdictions. I remember in 2001 leading a study tour to Hong Kong, Singapore, Malaysia to study their governance systems, and that's how we introduced our first code of corporate governance. Now, over the last 25 years, of course, the SECP has matured over time as well, and I see this time as really the inflection point, where from very fragmented beginnings, we have evolved into a very consolidated, investor-focused, and digitalized entity in a position to actually provide technical assistance, not just receive it. And I think that hopefully this conference will be the first of many series where we can exchange in knowledge sharing and eventually work towards a more integrated approach where there are cross-listings across jurisdictions, which of course enhance investor base, provide greater diversity in terms of product range, lower the cost of capital, the economies of scale. You can see I was paying attention to your speech earlier on. So all the benefits that you enumerated are very much relevant to the local context. And it's just a matter of now getting down to the nitty-gritty, getting a roadmap going, getting this dialogue on a regular basis, and making sure that there is consistency in action, there's commonality of purpose, and of course there's transparency and disclosure standards implemented across the board as we go forward.
Thank you very much for inviting here by SECP. As we reflect on the capital market cooperation, I believe it's helpful to begin from the foundation. The harmonization of trust, custody, and fiduciary confidence that comes from the integrity of our financial systems. This harmonization is rooted in the sound institutions, reliable technology, and transparent information flows across the capital market system. It is though this integrity through dependable system and clear communication that confidence grows, our markets begin to connect naturally in their own time. At this stage, our purpose is to open dialogue and create understanding, to gently unfreeze the inertia and begins exploring how our system can learn from the complement each other. The first step for our cooperation lies in the strengthening architecture of trust. That means ensuring effective custodial and settlement arrangements, investor protection framework, and transparent information sharing mechanism that inspire confidence. Technological alignment plays a key role. The gradual adoption of XBRL, the new digital standard for accounting reporting, can enable a consistency, machine-readable financial reporting, and enhance comparability of disclosure. Such measure improves transparency, reinforces compliance, and allows the regulator to cooperate more effectively. Knowledge sharing and capacity building, another area that we can look forward to. A natural and constructive path forward to focus the knowledge sharing and capacity building. Joint training programs can be arranged between two countries, between operating agencies, between intermediaries, at all three levels. Collaborative research and anti-money laundering practices, digital disclosure compliance, and emerging technologies. That's where we can start our bilateral cooperation. When you talk about the technology and partnership between countries, as you already know, the Shenzhen, China, they are also partnered with DAC, brokerage, in Bangladesh Stock Exchange. They have also partnered with PSX, we can have that, the common platform to take it forward. When you talk about the cross-border listing and market development, cross-border listing represents the attractive long-term opportunity for both of our nations. By working steadily to reinforce these foundations, we position our markets for future connectivity and when conditions are right and institutions are ready. In this sense, preparation itself becomes progress. In my closing reflection, looking ahead, regional cooperation will evolve naturally from confidence and connectivity. It grows from assurance that each system upholds the same principles of integrity, transparency, and accountability. Our shared task at this stage to keep the conversation open, deep in mutual understanding, and natural trust. By harmonizing our principles and strengthening systems that carry them, we prepare our ground of sustainable collaboration. Because in the end, harmonization is not a single act. This is continuing culture of trust, diligence, and shared purpose. Thank you very much.
Thank you. And
Bismillah ar-Rahman ar-Rahim. First of all, I would like to thank Mr. Akif Said for organizing such fruitful event, and also thanks to you, Professor James Engel, for giving me this chance to talk about the regional cooperation. Let me start my talks with recitation of a verse of Holy Quran. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم تعاونوا على البر والتقوى ولا تعاونوا على الإثم والعدوان. In this holy verse, what we learn from Holy Quran is that you should cooperate based on the al-birr wa taqwa. So when we talk about the regional cooperation, and when we talk about the dual listing of the financial products, that's an order which is previously announced by Holy Quran. In the same way, when we talk about regional cooperation, I think that it requires three main elements. Let me share with you about the experience of Iran capital market. We try to provide some sort of regional cooperations. In some cases, we were successful. In some other cases, we were not. I am from the Securities and Exchange Organization of Iran. We regulate the Iran capital market. We tried to move forward for some sort of regional cooperation. We were somehow successful for what type of instrument? For specific instruments in which we could provide some sort of technical arrangements and also a mutual product, a mutual financial product. So basically for regional cooperation, there are three main base requirements. The first one is pre-issuance, issuance and trading, and post-trading. For pre-issuance, I believe that it's quite important to have an integrated Shariah and legal infrastructures available. And during the issuance and offering, we can have some sort of mutual exchanges between, for example, Pakistan and Iran, Pakistan Stock Exchange, and maybe Tehran Stock Exchange might be mutualized. And also for securities and depository instruments. And as you, Professor Engels, you indicated correctly as one of the main areas of the expertise in terms of digital currencies, I think that in order to have some sort of regional cooperation, it's very important to use the digital currencies for post-trade and for settlement. And if we use them effectively, I'm sure that we will have some sort of regional cooperation. And as you indicated correctly in your presentation, we will reach to the enhancement of financing power for investment, diversifying the investment opportunities for investors, and also providing a wider range of opportunities for both the companies and the investors. Thank you very much.
Hello, Bismillah ar-Rahman ar-Rahim. It's a great honor to stand before you today in Pakistan to discuss a topic that holds immense potential for our economics and our people. The capital market and the opportunity for regional cooperation. As we navigate the complexities of globalization economy, it's imperative that we come together to explore avenues that can enhance our capital market, foster collaboration, and ultimately drive sustainable growth across our regions. Let me take this opportunity to address you here on the subject of capital market and the promising opportunity for regional cooperation between the capital market of Iran and Securities and Exchange Commission of Pakistan. As we stand at the crossroad of economics growth and collaboration, it's crucial to explore how our shared values and aspirations can lead to a broad partnership, particularly in the realm of Islamic finance. Islamic finance roots in a principle of fairness, transparency, and ethical investment offers a unique framework that aligns with the value of our society. Both Iran and Pakistan have made significant strides in developing Islamic financial instruments, and this presents a remarkable opportunity for us to collaborate and strengthen our financial ecosystems. The potential for Islamic finance to drive economic growth is immense. By leveraging our respective strengths, we can create a more integrated financial market that not only serves our domestic needs, but also attract international investors seeking sharing compliant investment opportunity. Furthermore, we must explore the potential for cross-border listing of Islamic financial products by allowing companies from Iran and Pakistan to list their Shariah compliant securities on each other's exchange. We can deepen market liquidity and provide investors with a broader range of investment options. Such cross-border initiative can enhance visibility for our companies and attract foreign investment, fostering more dynamic and resilient capital market. It's imperative that our regulatory bodies work closely together to streamline that listing process and address any challenges that may arise. To facilitate easier access to investor, regulatory harmonization will be essential. By allowing our regulation related to Islamic finance, we can create a seamless environment for cross-border transactions. Additionally, the CO's regulatory bulletin publication provide a wealth of information of market trades, regulatory updates, and research finding related to Islamic finance. The resource can be invaluable for SECP as it seeks to enhance its regulatory framework and promote transparency in the Islamic capital market. By establishing a system for exchange of this publication and research outputs, both organizations can stay informed about the latest development and challenges in their respective markets. Furthermore, given Pakistan's significant capacity for Islamic finance, characterized by a diverse range of Sharia compliant products and growing investor base, this collaboration can lead to the development of innovation financial solutions that benefit both countries, ultimately strengthening the Islamic capital market in the region. Secondly, we must explore the opportunities for cross-border listing. This initiative can significantly improve market depth and liquidity by allowing companies from our neighboring countries to list on our exchange, we create a more vibrant market environment that benefits all stakeholders involved. Cross-border listing can attract foreign investment, enhance visibility for companies, and provide investors with a broader array of investment options. We should actively engage in discussion with our regulatory bodies to streamline the listing process and address any concerns that may arise. This collaboration can pave the way for more integrated regional capital market. The potential for cross-border listing between the Security and Exchange Organization of Iran, SEO, and the Security and Exchange Commission of Pakistan presents a promising avenue for enhancing the Islamic capital market in both countries. Since the first Sukuk issuance in Iran 29, the country has developed a diverse array of Sukuk types, including Ijara, Murabaha, Salam, Istinsa, and Musharaka. These instruments not only provide Sharia-compliant investment opportunity, but also demonstrate the maturity and depth of Iran's Islamic finance sector. By facilitating cross-border listing of this sukuk, both Iran and Pakistan can attract a broader investor base, enhance liquidity, and promote greater integration of their financial market. The various sukuk structures available in Iran offer unique investment opportunities that can cater to different risk profile and investment preferences. For instance, Ijara Sukuk allows investors to benefit from rental income generated from leased assets, while Murabaha Sukuk involves the sale of goods at the profit margins. Salam Sukuk provides financing for agricultural products, and Istinsa Sukuk is used for manufacturing and construction projects. Each of these Sukuk types can be appealing to investors in Pakistan who are increasingly seeking Sharia-compliant investment avenue. By listing this Sukuk on this Pakistan market, issuers can tap into a new pool of capital and diversity their funding sources, while Pakistan investors gain access innovation financial product. Moreover, cross-border listing can foster closer collaboration between the SEO and SECP, paving the way for regulatory harmonization and knowledge sharing by allowing the regulatory framework governing sukuk insurance. Both organizations facilitate a smoother process for cross-border transportation. The collaboration can also enhance investor confidence as it ensures that all listed sukuk meet the necessary Sharia compliance and regulatory standards as both countries continue to strengthen their Islamic finance sector. Exploring this cross-border listing opportunity will not only enhance market depth, but also position Iran and Pakistan as leading player in the global Islamic finance landscape, ultimately contributing to economic growth and stability in the region. To enable easier access to foreign investor, key regulatory and structural reforms are essential. We must work collectively to identify and remove barriers that hinder foreign investment. This includes simplifying the regulatory framework, enhancing transparency, and ensuring that our market operates on a level playing field. Moreover, investing in modern infrastructure such as trading platforms and settlement system will facilitate a smoother transaction and boost investor confidence. By creating a conducive environment for foreign investors, we not only attract capital, but also foster long-term relationships that can lead to further investment opportunities. The evolution of the capital market in both Iran and Pakistan has been significantly shaped by key regulatory and infrastructural reforms. A landmark development in Iran's capital market was the the mutualization process that began in 2005, leading to establishing of the Securities and Exchange Organization, CO of Iran. This reform transformed the market from the member-owned structure to a more efficient investor-oriented model. Today's Iran capital markets is supported by 4 major exchanges: Tehran Stock Exchange, TSE, the Iran Fara Bourse, IFB, the Iran Mercantile Exchange, IME, and the Iran Energy Exchange, IRENX. Each of these exchanges plays a distinct role in facilitating various types of trading activities, including equities, commodities, and energy products. This diversified exchange structure not only enhance market liquidity, but also provide investor with a wide range of investment opportunity. The existence of multiple exchange allows for a specialized trading environment, catering to different asset classes and investor needs, which is essential for the overall growth of Islamic capital market. In addition to the exchange, the Central Security Depository of Iran, CSDI, plays a crucial role in the past trade settlement processes, ensuring that transactions are efficiently settled and recorded. The CSDI enhances the operation infrastructure of a capital market by providing a secure and reliable mechanism for safekeeping of securities and settlement trades. This infrastructure is vital for maintaining investor confidence and facilitating a smooth market operation. By sharing insights and best practice regarding regulatory framework and infrastructural development, SECP of Pakistan and COA in Iran can learn from each other's experience, fostering a collaborative environment that enhances the efficiency and integrity of their respective capital markets. Such cooperation will ultimately contribute to the growth and stability of Islamic finance in both countries, paving the way for a more integrated regional financial landscape. However, we must acknowledge the current barriers to portfolio investment and cross-border trade issues such as currency volatility, differing regulatory standards, and political instability can deter potential investors. To overcome these challenges, we need a concerted effort to harmonize regulation across our border, establishing regional framework that address this concern can create a more attractive investment landscape. Additionally, enhancing our diplomatic relation and fostering trust among nations will be crucial in building a stable environment for investment. Iran has made strides in this area by successfully introducing portfolio future and option aligned with Shariah compliant alternative. These products have not only expanded the range of investment opportunities available to Iranian investors, but have also enhanced the overall liquidity of the market. However, the absence of similar product in Pakistan limits the ability of investors to engage in cross-border investment effectively. By collaborating on the development of Sharia compliant derivatives, SECP and CO can create a more integrated market ecosystem that caters to the needs of investors in both countries, ultimately fostering greater cross-border trade. Thanks for your attention.
Thank you. Now, we're almost out of time. So what I'm hearing is there are a lot of opportunities, and especially in areas like cross-border listings. The real quick question to wrap it up, what are the next steps? So what are the concrete actions that can be taken to proceed from here? It's one thing to say, yes, integration is good. But what can we actually do? What is the next step? What should be the first thing that collectively the people in this room do when we leave the conference? So what are your thoughts?
I'm happy to take a shot. I think it's important to have a combined roadmap. It starts with knowledge sharing, as I mentioned earlier. We can even work towards a regional capital markets academy where we have common certification for our professionals, knowledge sharing as well as secondment opportunities across jurisdictions. The more we learn about each other, that builds trust, and trust is the cornerstone of all future cooperation. So I think it does need to start with knowledge sharing, some concrete steps towards that direction, but also combined roadmap. We have to be conscious of the fact that a lot of the things that we need to accomplish to go towards integration involve a lot of costs. So there has to be political buy-in, consistency of that buy-in over time so that any disruptions, whether political or economic, do not derail the plans that we make. So there has to be not just the regulators and the market participants, but very importantly, the economic management of the countries that need to be involved in the future direction, because there are concrete challenges such as capital flows, taxation structures, as well as investor protection protocols that need to be ironed out before we can move towards greater integration.
Thank you very much. The first thing that we are looking forward to, and the cooperation actually began from the sharing of the technology. And as you have been seeing, Pakistan actually strived through already, I mean, in many aspects of insulating the trust custody, the piping. And they also, I have seen some of the digital assets that they have created the momentum and they created the platform to trade on. So these are the things that we are also looking forward to. In fact, we are in a time that the Bangladesh market actually undergoing some of the reform initiative from the Securities and Exchange Commission and from the other operating agencies like exchanges, depository, and the clearing system. So we are actually looking forward to the cooperation in terms of understanding the way the Pakistan, creating the environment for the transparent transaction, transparent disclosure. So these are the areas actually I see a huge potential for Bangladesh to be in the going forward to shake our hand with this region. Thank you very much.
In Iran, when we had a plan to launch our credit rating agencies, we used the experience of Pakistan capital market, and we try to utilize from the experience of Pakistan. And alhamdulillah, now we have some rating agencies in Iran. And I believe that to answer your question, in order to reach to the next step, I suggest to establish some fintechs based on the legal and infrastructures of both Pakistan and the 2 or 3 major capital markets, and that fintech would provide the main necessary requirements, technical and legal, and the other infrastructures required for a successful cooperation between the regional capital markets. Thank you.
I'm sorry, that's all we have time for, so let us give a big round of applause to our panelists.